There we go. And hello, South Florida. Welcome to another live edition of the Real Estate Show, South Florida's #1 program about real estate and America's longest daily radio show, all about, well, I'm sure you guessed it, real estate. My name is Eric Willner, and I'm your host, and I'm here live Monday through Friday. That's 5 days a week. We're here live at 5 p.m. That's Eastern Time, and we are available to you 5 different ways. So 5 by 5 by 5, as they say in the radio business. And we are here live on the AM 1470, FM 95.6, 96.9, on the apps, one of the free apps that you can download, the iHeartRadio app, TuneIn app, the radio.com app. WWNN even has there, and that's what you can find them on all of those. Just search for WWNN 1470, and you will find them there on your free app that you download from wherever you get your apps from. We also broadcast this live streaming every day on our website. Great place. Check out the new updated version of our website at automaticlandlord.com. That's automaticlandlord.com. And you go to the top of the page, you see the real estate show in the drop down menu. You'll see where you can either listen live at 5 p.m. Eastern, or you can listen to any of the previously recorded shows under the show notes. And each one of those notes has a brief description, and in there is a link that you can listen to the show uninterrupted in its entirety right there on our website without going anywhere else. But if you are going somewhere else, download the podcast version and take it with you. You can listen to it offline as well. And finally, you can watch us as well as listen to us live on our Facebook page. And that Facebook page is aptly named The Real Estate Show. Type it in the Facebook when you search it as if it was all one word, The Real Estate Show, and you will get right to where we are. Now, a little housekeeping. Tonight at 8 p.m., we have our real estate forum. And this is a free workshop. We're going to be talking about the very subject that we've been talking about all week long. And that's investing in real estate, investing in judgments. Very interesting, frequently overlooked area, but very profitable area in real estate. So for those of you that already texted the word, what was the word yesterday? The word was judgments to 561-861-2366. If you texted that yesterday, don't worry. It's in the queue and it's on the way. It's going to be released because they're closing out the space probably shortly after this show airs. And then you'll be receiving the code for the Zoom meeting tonight at 8 o'clock, where we'll be talking investments and particularly talking about the topic of judgments. Really a fascinating area. And if you missed our show about judgments, go back to our Monday show. That's sort of our Mondays on a Mission, and all of the things about the topic of, so we call Mondays on a Mission, our day for definition, where we'll talk about what it is, how it works. And then, of course, if you want to know how to get involved in that, well, you're in the right place here. We got some pretty cool opportunities there to be able to invest in real estate judgments, invest in real estate properties, and even invest in real estate notes. There's a lot of different ways, lots and lots of different ways to invest in real estate. So it's good to know that. But today, and by the way, so one last time to make sure that everyone got the information they need. I know Susanna was just asking that the word is judgment. Text it to 561-861-2366. And all of the invitations are going to go out today, a little bit after the show. The Zoom room has been set up already, and now everything is ready to receive everybody tonight at 8 p.m. And that's also Eastern Standard Time. So what's going on in the real estate world out there? Lots is going on. Of course, it's big news that the Supreme Court, of course, reversed the CDC's extension of the moratoriums. So we're going to see more foreclosures and more judgments. And that's what's the reason why this is a very timely conversation. But interestingly, and quite in line with what we have been saying here all along, is that real estate, the housing market prices, price gains remain strong. And I'm saying that across the board, but no bubble sign, or no sign of a bubble in sight. And in fact, one of the articles that I was looking at, and it was a video that I was listening to, that the CEO of the real estate fund for Nuveen Capital was just saying the same thing, that she believes the housing market is fundamentally strong, that the slowdown, and we're going to see, and I hope that when you now are a listener of the Real Estate Show, that when you see some of these articles, take a second and read beyond just the headline, because in the same scan of the eye of the headlines, you can see real estate is hot and real estate is slowing down. Well, which one is it? And quite frankly, our position here is, if things happen to slow down a little bit, that is a good thing. It is a much more sustainable pace to maintain that we are having. But we've been seeing super strong gain. In fact, I'm going to talk about that in today's edition of the Real Estate Show. We're going to talk about how the mortgage market actually slowed down. We saw that the number of contract signings slowed down, and you could easily spin those headlines as a negative sign. But I'm going to tell you that those are actually really good signs. That with rates having gone up a little bit recently, we see that a lot of people, there's not as much of an advantage into refinancing, so that eliminates that part of the market. And as mortgage rates rise, it also raises the issue of affordability. So that's okay. And of course, the slowing down sales has a seasonality factor to it. Most folks that are moving during the summer are now, they've gotten their places. They've looked, or you've seen a little bit of the buyer's fatigue evidenced in those numbers. And you can't sell what you don't have. And if there's still an inventory problem, and there is, then it's hard to have growing sales numbers. But how you know that there's a strong element to that? Well, we're going to get to that in a little bit later in the show. But we're going to talk about soaring home prices shattered another record in June, and that's according to the S&P Case-Shiller Index, showing that the price of homes, supply and demand, short supply, high demand, causes prices to do what? Go up. And that's exactly what we've seen. And going back to that interview that I mentioned before from Nuveen's real estate specialist, that we're talking about the demographics. And we've mentioned this a number of times here on the radio show, that we have a huge demographic and emerging population of more financially savvy, growing in financial purchasing power, and that, of course, is the millennials. So that bodes well. And quite frankly, we're still here we are. How many years after the Great Recession? We lost about 10 years worth of construction time. And so it'll take a while to catch that up. And we're still not, you don't see cranes everywhere you go. You don't see home builders everywhere you go. There's still a moderate enthusiasm. And same thing back into that interview they were talking about. Quite frankly, there is still a dire shortage of affordably priced homes. And now you're sort of in this catch-22 in that arena, because builders are building in the 600,000 plus all over the place, not building in the 500 and below, or 400 and below, or 300 and below, even more aptly. And that's where the largest demand is. However, look at it from a business person's point of view, that it's very difficult to make an entry-level house be profitable. And that's what that is all about. So that's obviously driving the affordability away, as you have more and more people competing for that relatively relatively little um, construction and inventory that's out there. So kind of neat, really neat. So anyway, I saw a really cool piece of news flash on my screen here as I was talking about the news, and it just brought a big smile to my face. It means that I'm a grandfather again. So anyway, we're going to go ahead and take a quick break. Hear a few words from our sponsors. You're listening to The Real Estate Show. My name is Eric Willner. Don't touch that dial. When we come back, we got a lot more news, and we're going to go a little bit deeper into the market numbers. So we'll be right back right after these words. Did you see that note go across? Babe? Yeah. There's a new baby boy in the world. 9/1. September 1st. That's a beautiful thing. How do you like that? You guys found out about it first. I'll have to skip that one. William, Susanna, and welcome back. For those of you just joining us here on The Real Estate Show, South Florida's #1 program about real estate and America's longest running daily radio show about real estate. We are heard here live Monday through Friday. If this is your first time, welcome. We are here live at 5 p.m. Eastern Standard Time. That's 5 days a week. And on Sunday, we are not live, but we are sequential. We are, in fact, at 9 p.m. We play all of our week's new shows Monday, starting on Monday for a straight 4 shows in a row, starting at 9 p.m. So if you missed any one of the shows, you can capture them again on the Sunday show right here where you're listening to us. Or you can always go to our website again, automaticlandlord.com. That's automaticlandlord.com. At the top of the page, you'll see the radio show notes. And in the notes is the link where you can listen and download to the week's shows. You can also go to our Facebook page there, and they're available on demand there as well. It's on demand in both places, on our website, automaticlandlord.com, and on our Facebook page in what I call reverse chronological order. The most recent one closest to the top, and then you go the day before below that, and the day before below that, and so forth. So we also have been seeing a little bit in the news the conversation from the feds talking about reducing the amount of the mortgage bonds and some of the the economic stimulus that they're doing is to start to taper off on that. And that is also a good sign. That means that they are signaling that the economy is looking stronger and stronger. And of course, I always say that it all boils back to the beginning. The job market is critical for real estate, because when more and more people have good, well-paying jobs, they have good, well-paid paychecks, which make for good, well-paid mortgages. And it is mortgages that, of course, is the the accelerator. It's the fuel to buy more real estate. So all of that seems to be going in the right direction. Like I said, a more sustainable rate goes in the right direction. And so the question that I saw going across one of my screens was, will the taper talk by the Feds end the refinancing boom? And quite honestly, if we slow down on the refinancing, that is a signal that we've reached a certain amount of financial strength as well. So then I want to jump over here to what I started out sharing with you, which is soaring home prices shattered another record in June. So with all this talk about slowing down, we're sitting here breaking records. What record did we break? Well, home prices rose, get this, 18.6% annually in June, up from 16.8 increase in May. Those are very, very strong numbers, according to the S&P CoreLogic Case-Shiller National Home Price Index. And so now prices are, believe this, 41% higher than their last peak during the housing boom in 2006. So here we are, 15 years later, and they had once said that there was what was they call it? It was a shadow inventory or an inventory overhang, as I saw it once termed, that wouldn't be solved for at least 15 years. Well, needless to say, it took about half of that amount of time. Real estate, once again, proving to be one of the fundamental, strongest pillars of the real estate, of the economy, period. Real estate alone usually is the last to go and one of the early starters. It really is a huge part of the economy when you think about it, besides the fact that it is a basic need, always needed: food, shelter, transportation. But you also have the fact that because of real estate, you have construction, you have all of the trades, the repairs and the maintenance, from plumbers to painters to carpenters, paint, and you name it. On the trade side, the monthly services, the pool services, the lawn services, you've got all the utility services that, of course, feed off of real estate as well. So when you think about it, and you should, real estate really is the ideal investment. We always talk about that, all of the advantages that real estate has. So going a little bit deeper in there, because home prices, they continue to move up due to, as I say over and over, the strong demand and the persistent low supply. And even from the permits, which goes way back, because the permits signal what's going to be built, let alone what's, shovels in the ground of projects that are being built. But even the permit rate isn't enough to catch up to the demand that we have. And, barring something absolutely crazy, but, we do live in a crazy world, but barring something absolutely crazy, there is very little out there that could really disrupt the real estate market. So, as I said, up 18.6% in June for home prices. 16.8% was the increase in May. That's the largest annual gain in the history of the index, dating back to 1987. Prices nationally, like I said, are now 41% higher than the last peak during the market in 2006, with no signs of overheating, over leveraged. Remember, people now have to really actually qualify for mortgages. The days of fog and mirror, get a loan, are well behind us. The crazy toxic products that were out there are also not in the marketplace right now. So unlike other median price surveys, which can be skewed by the type of homes, this particular measure, the Case-Shiller index, measures repeat sales of similar homes over time. So the 10-city composite rose 18.5% from 16% the previous month. The 20-city composite was up 19%. And so the strongest price increases, you should know, are in Phoenix, San Diego, and Seattle. all on the West Coast, reported the strongest price increases of the 20 main cities. Prices in Phoenix increased 29%. And I see, as I said, that is not long-term sustainable. Great news, especially if you own real estate in Phoenix. But San Diego, they were up 27, and Seattle up 25. And all 20 cities reported higher price increases in the year ending June 2021 versus ending in the 12 months ending May of 2021. The last several months have been, and this is a quote, have been extraordinary, not only in the level of price gains, but in the consistency of gains across the country. And that's according to Craig Lazara, Managing Director and Global Head of Index Investment Strategy at S&P DJI. In June, all 20 cities rose. In all 20 gained more than the 12 months ended in June, and they had ended in the previous month. So prices just about, because it's funny when I speak with investors on the phone and we're doing our consulting and our conversations, I always get, but Eric, you have no idea. In my city, it's really hot. And I go, yes, in your city and in the other 20 cities here across the country, they continue to surge due to the strong demand and, as I said, persistent low inventory. And we can see the inventory coming. So while supply has been increasing month to month, and we've even seen there's really two types of supply, right? There's the supply of existing homes that may or may not come on the market. And that, of course, is incentivized either by, the prices that people are getting. But on the other hand, when I sell my home, where do I go if I find or feel that I can't go anywhere? And by the way, we have a solution for that. And so if that's your issue, then you might want to contact us on our website or on our Facebook page. You can instant message me on the Real Estate Show. You can message us on our website at automaticlandlord.com. And of course, you can always call us on our toll-free number, which is 888-595-7779. That's 888-595-7779. And of course, remember our Real Estate Show smart text line, 24-hour text. Nobody will call you from this number. You can text it and it will reply with information, invitations, and the other things that we mention here on the radio show. For example, tonight at 8 p.m., we are having our Real Estate Investors Forum. And that is to talk about, to get ready for this, the loosening and the increase in foreclosures and the judgments. And what many people don't know is that you can sometimes buy the judgments before it goes to sale and actually stop it from going to sale. And imagine if you could you buy it at a discount as a judgment and therefore foregoing. It's basically kind of like walking around the line and getting good deals anyway. So text the word judgment to 561-861-2366. That's 561-861-2366. The word judgment is what you text. And then you will receive, later on after this show, you will receive a link, a free workshop, what we call the Investors Forum on judgments. So back to this article, Peter Bukvar, Chief Investment Officer at Bleakley Advisory Group, says prices are rising at really out of control pace that is unsustainable and unhealthy. Does that sound somewhat familiar? I thought that was kind of interesting and something that we've been saying for months and months. And as I see the signs of the market slowing down, I see that not as a negative, but as a positive. So home sales as a whole have started to cool. We talked about that. Remember, you see some headlines saying what appears to be negative. Signed contracts on existing homes, we reported that earlier this week, dropped in July. And that was according to the National Association of Realtors. It gathers all that information from their 1.4 million realtors all across the country. Prices usually lag sales by about 6 months. Think about that for a second. So that could be a sign that price gains will stop accelerating as they have been for over a year. So 45% of The buyers say they have delayed purchasing a home due to the market conditions, and so that might still draw more. As you can see, the consistency of the demand, there's layers of demand out there behind there. So as long as the economy is good, real estate is good. And when would now be a great time to find out? Remember, text the word judgment to 561 861 2366. We're going to wrap it up right here on our midweek report. Remember, we'll be back again here, same place, same time tomorrow. We're going to talk about the money on our ATM edition of the Real Estate Show. That'll be right here where you're listening to us tomorrow at 5 p.m. on Thursday. So that's it for today. Eric Willner signing off. Drive safe if you're out there on the roads. Remember to wash those hands, stay healthy, and make it a great day. Bye-bye. Yep. Thank you very much. And let's go wrap up this recording online here. Let that one go. And